Welcome back to another episode of Not Financial Advice. My name is Sean, and on today's episode, we're going to be talking about why I bought shares in my hometown bank. What is it that a bank does? A bank takes your money and then invests it at a higher rate of return while returning to you your money on demand with lower rates of return on different products like CDs and things of that nature. And so it is truly a fact that there is no such thing as a skinny banker. And I am here to spread the message that poor and middle class people should turn away from banks. Obviously, it's necessary to have a bank and to use a bank, but it's better to own your own bank. And, if there's a company that you use in your daily life, like Coca Cola or like Hills Bank, and they get a noticeable amount of your income, if they're a good business and the stock is in a decent or strong position, you might as well own it if your money's going to them. That's a true force of democracy in finance and the ability to get you into that Lambo by age 45. So, we're going to talk about Hills Bank and why I own it right after this.
You need to diversify your bonds.
The only problem you're going to have is that you didn't buy more. Because by the time you read about it in the Wall Street Journal, it's already too late.
All right, welcome back. So hit the like button on the video, subscribe to the channel, and let's just jump right in and take a look at Hills Bank stock chart here. So they've been public for about 17 years. If my math's right, they've returned about 8.5% a year over that time. And if you're looking at this chart with me here, it looks a little bit peculiar. You see lines that are a little bit more angular or erratic, but you can see easily that the trend is in fact up and to the right. So first and foremost, this is a very, very small stock. There's only something like 18 branches of Hills Bank, and that's here in East Iowa, where I'm from, which is Iowa City. So they're also in the county south of me, Washington County. That's an agricultural area. Where I live at is home to a big public university and hospital, a little bit more of a suburban area. And the county north of us is a big titan in industry as well as in aerospace and defense. And so I know a lot about the types of people, the culture that make up this bank and its employees. And I know the types of assets that this bank owns because I know my own community better than anyone can on Wall Street. At the same time, with only 18 branches, this is what's called a micro cap stock. That means all of its shares are worth $660 million. It is a very, very small stock. And so if someone buys a lot of shares on one day, and a lot is relative, it can jump whatever this number is. It can jump 9% in a day because the volume is so low. But overall, the company goes up into the right around 8.5% a year. And that was a good starting place for me. So let's get over here to Quiltrum and take a look at some of the different financial metrics on Hills Bank and just sort of give you an idea of why I bought it. So first and foremost, one of the best ways to analyze a bank is on a price to book value. This is trading essentially as a penny stock or on the pink sheets. And so we don't have full financial data here at Qualtrum. But just for your information, this company's trading at about a 1.2 price to book ratio. That's important. I'm going to explain why later. But when we look at Hills Bank, what we can see on their different metrics is as follows. So for revenue, it's gone up and to the right and it's spiked recently. But revenue is going up and to the right at the rate of about 11.4% over the last 4 years. That earns a thumbs up from me for top line revenue growth. That's actually a pretty high rate of growth, but that's what you can get in smaller businesses. So additionally, we can take a look at free cash flow. Not one of the major metrics for analyzing banks, but it's nice to see that it does go up and to the right. And this isn't necessarily they had a spike there, so it looks lower there. But you can see this nice trend of up and to the right, and they had free cash flow in the 4 quarters for 2023 of $47 million. So looking really good. Another thumbs up from me. Now, looking at some of the other metrics that we use to analyze banks, what we can see here is cash and debt. Let's go on a quarterly basis and let's see where they're sitting at with cash and debt. So they have $840 million in cash and $513 million in debt. So they have a lot more cash than they do debt. And so that checks out. It's a thumbs up. Switching back to our annual view here, we can see earnings per share growth looks good. It's up 4.2% year on year over the last 10 years. That's decent, getting a thumbs up rating from me as well. And now on this company, on the stock, it pays about a 1.5% dividend yield, and it's at a safe level. So dividends check out with me. And let's take a look at shares. So they are a modest repurchaser of shares. They have sort of a track record of that. And so they get a thumbs up for not diluting shareholders. Now, looking at ratios, very low. This might be standard in the bank industry. We're going to look at some comps here at the end of the video. So I'll give this a so-so rating. And then looking at historic valuation, they're trading at about a 14 PE. Over the last 10 years, it's actually trading at a bit of a premium to its price earning ratio. So that would be a thumbs down rating for me. And we also can see that expenses are going up in the right modestly. Another thumbs down from me. Now, this is really important. So sometimes insiders will sell shares if they want to buy a new house or something of that nature. But whenever an insider of a company buys shares, there's only one reason for that. And that's because they believe the price of the company is going to go up. And so I see some person here, Sheldon E. Yoder, very East Iowa name. Honestly, even a little bit of like a Amish or a Mennonite name. So there's a lot of people named Yoder, and they're all great folks. So he just bought $65,000 worth of Hills Bank at $72 a share. I bought in around this level, around $66 a share. So we have insiders buying this stock. Double thumbs up from me on insiders buying shares. And if we just look here, we did have a sale at a lower price, which was unfortunate. But then we see people buying here. And here we have purchase right around 65, 62 bucks. So insiders are buying shares. What do they know that we don't know? So let's find out. I'll ask you to like the video and subscribe to the channel. And let's get over here and just sort of do a little bit of a dive on Hills Bank. So opened up in 1904. So they made it through the Great Depression. That was a great stress test. And so today, Hills Bank spans 18 locations with 500 employees across 3 Iowa counties. And you can sort of see some of these nostalgic pictures here. And then you can also see, I thought this was a really neat picture, so I want to show you this one as well. It shows history. So this is back in the Red Dead Redemption era. Very cool history here. And this is the nice lady, I think, that answers my call when I call to check how low my balance is. So we're in 3 counties for Hills Bank. My home county is Johnson County. Let's look at the type of employees and homeowners and businesses that are doing business with Hills Bank and why I had such a high level of confidence in buying the stock. So you have the University of Iowa and the University of Iowa hospitals and clinics, as well as the Iowa City Community School District. State jobs, academia, very steady, predictable. The VA, federal employer, another hospital. These 2 companies are in the education space, a grocery store, municipal employees, personal service company, Rockwell Collins, General Dynamics, Aerospace and Defense, Procter and Gamble, Oral-B, Geico, owned by Warren Buffett, et cetera, et cetera. So that's Johnson County. Those are the types of flows that are going into this bank. Then you also have Washington County. So this is a rural county south of me. As you can just see here, farm, farm. This has some of the best corn and soybean cropland in the world. And there's a lot to do with ethanol, as well as different inputs and components, what have you, different farm businesses, a little bit of light industrial in this area, construction, grocery stores. And so these are the types of flows, community college, these are the type of flows that are going into Hills Bank. And so really stable sort of businesses. Also, we have a casino. within Hills Bank portfolio, most likely, more than likely. And then also to the north of me, we have sort of our more industrial, metropolitan or uh, larger population area, which is Lynn County, and their top employer is Raytheon, a defense contractor. Healthcare, community school district, life insurance, grocery stores, um, so on and so forth. And so these are the types of customers that have their home mortgage through Hills Bank. And so we're going to jump back here real quick. So the company's returned about 8.5% a year over the last 17 years. And it's at about 8.5% a year in returns. But over the last 5 years, the stock has been essentially flat, returning only 7%. And so there's a concept in stocks for investing called mean reversion. And so having just looked at Hills Bank on Qualtrim, everything checks out. And so if this thing wants to run at 8.5% a year and it's just consolidated for the last 5 years, I believe what's most likely is a mean reversion and that there could be a future higher growth in the stock, more so than 8% a year, especially as interest rates are loosened and more home loans are written, things of that nature. So just double backing here on Qualtrim, we don't see any reason that the stock has been flat for the last 5 years. There's the revenue for the last 5 years. Here's the free cash flow for the last 5 years up and to the right. Now, you had that Silicon Valley Bank implode. And so that, as well as COVID, were probably the things that have been weighing the stock down. But no one on Wall Street's looking at the stock. It's just you and me, right? And so over the last 5 years, earnings per share, I suppose, have been a little bit flat, but they've increased their dividend as well, modestly repurchase shares. And so we don't see any reason that this company should be underperforming. Now, let's take a look. Understanding the data here should read about 1.2 price to book ratio. And what that means is it's all of their assets. It's the value of all of their assets versus the value of all the shares outstanding. So its market cap is around 660 million, and that's 1.3 times their sort of assets, essentially, in so many words. So when we see the best bank in the world, JP Morgan Chase, on contested, it trades at a 1.8 price to book. And so obviously the price to book for Hills Bank is 1.3 ish. And so it's less than JP Morgan. But what we can also see is there's a bank here that's quite distressed, New York Community Bank Corp, and they're trading at a much lower 0.4% price to book. And so what we can see here is Hills Bank and the market, or the segment of the market, or the individuals that are buying the stock, they don't see it as a risky bet. It's not the biggest game in regional banks, but it's somewhere right in the middle, and I think it's poised for continued growth and success. And so, in so many words, I guess in summation, I'll end the video at this. Peter Lynch said, "Buy what you know and know why you own it." And I can certainly do that because my first memories of this bank was getting a sucker when I was 4 years old and starting my first savings account when I was 10 years old. Um, and then, obviously Buffett, he owns banks, and I think he likes banks because they can be a play on inflation. I think Buffett likes banks because they have so many different products, CDs and mortgages. They have sort of a consistent stream of revenue. They're also hard to understand, and so often, really lowly priced for the amount of profit that they produce. So, what I would say is if you have your money sitting in a bank's, high yield savings account and you're getting 1% or something, just understand a bank, maybe like your hometown local bank. If it has some of the same qualities of mine, my hometown local bank, Hills Bank, it pays a 1.5% dividend. So why do I, let them give me 0.5% or 1% in a high yield savings account through them when I can just own my own bank and get paid 1.5%? Not to mention the historical returns of 8.5% a year. So if you're like me, with all of that said, not financial advice, be like Warren Buffett. Don't keep your money under your under your mattress. Don't keep your money in savings accounts, but own equities, own banks, and get access to your fair share of that cash flow. This is Sean, not financial advice. Thanks so much for tuning in, and I will see you on the next one.